So now, in the next month and quarters, we'll probably see in the US, not yet in the Eurozone, but core inflation creeping up and could become closer to the 2%, that's to say closer to the Fed's target.
Well, Patrice, thank you very much for joining us. It's always an absolute pleasure to have you in our studios. How are you?
Fine, my pleasure to be here.
Wonderful. It's a perfect time to speak to you, actually, because the markets have been somewhat crazy over the last few weeks. Inflation is all over the place. What are we likely to see moving forward from here? Is the worst of it over?
Probably we have seen a large part of the acceleration due to the commodity changes, to the weakness of the currencies and particularly the US dollar. So a large part of the acceleration in the inflation and particularly the headline inflation in the US is probably just behind us. But of course, there is some pressure to come, and it's probable to see, and particularly during the second quarter of this year, headline inflation in the US reaching 3% year on year, or to be close to 3%. So there are still pressures in the pipe, and notably what is particularly important for the central banks and the bond market, core inflation is creeping up slightly, and this is a total different scenario from what we had last year, because inflation and core inflation was particularly low. So now, in the next month and quarters, we'll probably see in the US, not yet in the Eurozone, but core inflation creeping up and could become closer to the 2%, that's to say closer to the Fed's target.
You mentioned the Fed there. How do you imagine the central banks to react to this? There's a Fed meeting in March, and also, what do you expect the ECB, what are they doing?
Yes, for the Fed, the scenario is at this point of time pretty clear, because now the bond market have already forecasted a rate hike in the March meeting. And it's probable also to see a bit of a change in the communications, because now we see the momentum in inflation, the momentum in the labor market, and the momentum in growth has evolved. So probably we will see a bit of a shift in communication, and more important for the bond market, the dots, that to say the medium-term forecasters coming from the ECB, the Fed governors, coming from the Fed governors will probably increase a bit by 25 basis points.
And just finally, let's look more specifically at the currencies. Is it a long-term bear market for the US dollar?
Oh, there is a risk, because as we mentioned, we have mentioned the shift in the Fed strategy, that is to say now to be more present in terms of rate hike every quarter, and the ECB will probably change a bit of its communications during the second quarter. So in relative terms, this is a fight between the plus and the negative factors. The positive factors are in favor of the US dollar are the growth and the changes in interest rates, but at the same time we have seen rising concerns about first, the trade deficit, the current account deficit, as there is a high momentum in the growth, there are a higher level of imports, and at the same time, we have seen some concerns related to the budgetary situation. It's true that the budgetary in the US, budgetary policy in the US has entered in a stimulative way that could create a higher level of deficit, which is a concern for the US market at this point of time, and that explains, in fact, the weakness of the US dollar.
Well, Patrice, thank you so much for speaking with us. It's always an absolute pleasure.
My pleasure.
And thank you for watching. If you like this interview and would like to find out more, be sure to head over to dukascopy.tv.